To the A.J. Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, A.J., whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, the main man of the hour, looking a little chilly there, AJ Brown. Good morning, AJ.
Hey, it's a little chilly here this morning. It's wet and cold here in Washington, D.C., but I'm sure we'll get over it.
Yeah, today is May 13th, and what else is cold on the street is all this inflation news that's really been hitting the market. What are your thoughts?
I mean, okay, so on Wednesday we had the Consumer Price Index, which I don't think is as important to the Federal Reserve as the personal expenditures index that we've talked about in the past, but this gets the rest of everybody excited. So consumer price index, man, it is high. If I pull this report up, you're going to see that they were expecting around 8.1% year over year. It's 8.3%. The Fed would like that to be 2%. And you factor out the volatile food and energy, and it's still 6.2%. Also, I want to draw people's attention to the report that came out on yesterday, the Producers Price Index. So when you look at Consumers Price Index, that's a measure of inflation on the consumer side, but there's also all the people in between the actual maker and the consumer, and that's wholesale inflation, and that's measured here. And these two reports usually come out within a day or two of each other. So the Producers Price Index, man, it's also high, SIP, 8.8%, a little bit lower than expected. The overall 11%. I mean, that means that a lot of companies are eating some of that inflation instead of passing it on to the consumer. Not because they're being nice, but probably because they just don't want the consumers to leave them. Even when you factor out the more, volatiles, food, energy, and also in the case of wholesale trade services, it's still incredibly high. So inflation's a big deal.
And the market took note of that, falling through, I believe, that critical level we were talking about, that 4,000, right?
That's exactly right. If you look here at our lowest close came in at 3,930. I mean, we were talking about 4,050 actually, and 4,050, 4,060. It totally was pushed out. That puts us into the first move of a very strong downtrend. Now, we're not going to call this a mature downtrend until we retrace from it and move again, but this is a good start for a downtrend.
Yeah, and so we're bouncing back today. Not sure if that's really based off of any news or just, valuations or a little bit of, a buying back of any of those short positions. Otherwise, crypto's been getting hit hard pretty as well. We talked about that. Not that we go into much detail, but it is kind of affecting the overall market these days. Any thoughts on that?
Well, absolutely. So we've been totally here at our talk show here, the AJ Brown Show. We've been saying that crypto is going to get deflated. That there's a whole bunch of agencies, not excluding the Federal Reserve, that want to see the crypto and all of these more riskier assets lose. If they want to see the bubble burst on anything, I think crypto is where it's at, and they're totally seeing that. We're seeing all that money that's leaving crypto going back into bonds, because bonds all of a sudden have value again, and going back into the stock market. But even the stock market is losing value as people are moving their money into bonds and things like that. Even the housing bubble is starting to slow down. There's, the time on market for houses is no longer like -1 days. It's like there's now, you got to list your house and let it sit for a while as people ponder it. Coming back to our chart on the S&P 500 really quick, Sip. If I show you something here, the S&P 500 has been teasing us quite a few times. It teased us here with an uptrend, and I'm using just this simple 3 and 5 day exponential moving crossing to kind of confirm when a bottom is found. So it teased us here saying that, hey, I think that we are going to continue on these moves that we've been making in the up direction. Totally teased us there. Then it teased us again here saying, I think we're going to join us into a sideways channeling market. We're going to see, like you said, today may or may not be an up day. We're going to see whether or not this is the new bottom. Because if this is the new bottom, it does hint, like we said, at a strong downturn. You can't get, I mean, even if it goes lower, this is all part of a downtrend. But what we would expect to make it an even more solidified downtrend over the next months is that if this retraces to about the halfway mark and then shoots down again, right? Because then you've got 2 tests of resistance, 2 tests of support, and so that's considered a mature downtrend channel. So we're watching that. This uptrend, I don't want anybody to get excited that this uptrend that's starting here, first of all, we got to figure out if it's a confirmed uptrend, because we've already been teased twice, once and then twice. But also, I don't want anybody to start thinking, oh gosh, I'm going to start trading, long. And if anything, this could be just a nice test of the downtrend that's about to, stay with us for the next months, if not years.
Yeah, and on our last episode, we talked about the summer doldrums, and so I would assume that the seasonality, the where we are on the calendar, may have something to do with the extension of that downsell. But here at Trading Trainer, we're okay with that sideways market because a lot of the strategies that you're implementing take advantage of that. And that's kind of what we're going to go over here in the next couple segments of the show. But before we dive into a few of those examples, let's give the audience an opportunity to ask any questions, any specific signals, any specific strategy related questions. Feel free to drop those into the chat. We will do our best to get to them throughout the show. Otherwise, I'm going to play our little commercial. We're going to drop a link into AJ's daily workshop. So if you're interested in learning the specifics of the strategies, feel free to click that link, jump in there. You can watch it in the next couple of hours. You could save it for the weekend. There's full instructions there. Otherwise, let's jump into our snazzy little commercial, and then we'll go into some specific examples.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. So our first ticker up is going to be one of the, I would assume, lesser popular social media networks. First question is, AJ, do you have a Pinterest account?
I do, but I don't think I've used it.
It's very popular with the ladies in terms of fashion, interior design, things like that. We haven't really talked about it in the past, and so I'm curious to know what you're seeing in Pinterest.
Well, I'm seeing that a level of support has been established at $18. And I'm seeing that there is a rough level of resistance at about $24. And I want to see that get validated. But when you guys think about selling premium, here's a couple of thoughts you might want to put into your thought process. If you've got a solid level either of support or resistance, that's the solid level that you may be thinking about getting exercised on, right? Because that solid level looks like it's going to hold more. Remember, when we sell premium, we set up a trade zone, and that trade zone is established by the strike price of our sold option, and it's established by the strike price of our protective option. And you think about the mechanisms by which these two boundaries work. The protective option, nothing happens to our position. Rather, the protective option, it starts to gain in value when our underlying symbol loses value, and it basically stops the risk because they gain and lose equally. So no risk happens past that threshold for the protective option. Whereas on the sold option, the sold premium option, the mechanism is you get exercised, the trade ends, you take your max reward, and you go from there. So if you're looking for a longevity of a position and you can only really feel confident about one threshold, in this case, we're talking about support, maybe we do a strategy that has the premium side on that heavy, thick level of support and the protective side on the more ambiguous side of resistance. That means in this case, what we want to do is start our premium trade by either shorting some of Pinterest or buying some back month put options. We're going to wait to do that till we get to the top. And then when we get to the bottom a few days later, that's when we're going to sell our premium. And in this case, we're going to sell put premium and buy a protective call. That way, we've set it up just like we talked about with our strategy that would get exercised and the trade with this thick level of support, and this more passive strategy of balancing off the losing initial covering position with that ambiguous side. And so this is going to be it's going to be more of an investment rather than a trade, which we like. We like those hands-off type trades. So that right there is worth, your time on this call this morning.
Yeah, and it once again, it looks like it's in that sweet spot for pricing, right? What
Yeah,
is that range there? What,
absolutely.
18 to 24?
18 to 24. So that's also makes it affordable for the general public. Anybody who's got a couple $1,000s could totally throw that at this investment.
And so you're playing it to the long side?
No, I'm going to be playing it to the short side, in fact. So my initial position, I'm waiting. And once it tells me that it's at its top, hopefully it'll be at its top around $24. That's when I'm going to either short Pinterest or buy some back month put options. Either one of those, they're kind of the same thing. So I'm going to start the position off with that. And then I'm going to wait patiently because that position will profit as long as Pinterest starts to go back down. Once Pinterest kind of bottoms out, wherever it bottoms out, I'm going to then set up the premium trade, which is selling the put option and then buying the protective call with a strike price up here. And that I let that run, and it's going to pay me every time I install that position. So that's kind of the plan on Pinterest. But the key here was, since we have a solidified level of support, that's where we want to do the sold premium. So if we had a solidified source or a solidified level of resistance, we would want to sell call premium. Since we have a solidified level of support, we want to sell put premium. So we're actually reverse engineering our premium trade to go with wherever we have a solidified level.
Yeah, and if we look kind of at the timeline, that could be late next week, maybe early the week after, where that kind of starts to define itself.
Yeah, I actually think that it'll be late next week that we get into the position initially. And then by the time we sell premium, we'll be talking about June premium. Or if you're doing weeklies, you're going to go about 3 to 5 weeks out with your weeklies.
Beautiful. Love it. So we're going to go ahead and add Pinterest to the watch list. We'll keep an eye on that. Moving on to our next ticker, it's going to be Federal Signal Corp, FSS, and this is a question from Charles in Charleston. And I'm not sure of what he's looking at, but we are seeing. It looks like there's some consolidation there.
Well, I like this ticker, Charles, from Charleston. That's ironic, isn't it? That's kind of cool. Of course, I had to pick up on that pattern. My wife, I got to tell you a quick story. My wife thinks I'm hilarious because I've been looking at patterns in the market for almost a quarter century now. So I start to see patterns everywhere. I see patterns in like people's personalities. I see patterns in names. I pick up on all these weird patterns. In fact, there's an electric meter on the side of our house, and every time we go out and get into the car, I kind of glance at the electric meter, and like I'll know if she's been like if she turns on the air conditioning a degree lower than it was, because I'll see that the electric meter is turning faster. And so it's a pain in the butt to live with me because all I do is identify patterns everywhere. With that said, this is a good this is a good pattern, Charles, from Charleston. So I see very similar to what we were seeing in Pinterest. I see a level of support, but I also see that level of resistance. It looks like we're trading somewhere around $32 for our level of support and somewhere around maybe $35 or $36 for our level of resistance. This is it looks like this is going to be a nice premium trade. So because it's sideways channeling, we could trade it either way. We could either trade it by selling calls or we could trade it by selling puts. And in this case, it looks like we're going to be identifying a bottom soon. And so if you're not already in this position, Charles, either shorting or going long the stock, or if you wanted to substitute, instead of shorting it, you could have bought yourself a back month put option. Instead of going long the stock, you could buy yourself a back month call option. They're kind of substitutes. If you haven't gotten into this position some way or another, then this bottom that is going to be forming is where we would think about either buying the stock or buying a back month call option. What I use is the fast MACD. The fast MACD, I got this from the folks over that came up with the MACD. And so for you guys out there who want to use the fast MACD, take your standard MACD and reprogram it. Reprogram it to be 6 for the fast length, 19 for the slow length, and 3 for the MACD length. This is instead of the standard 12, 26, 9. Use the 6, 19, 3. And so this gives me some good signals for my sideways channelers. So I haven't yet gotten a signal. I would get a crossing of this MACD line over the MACD average line. That signal would tell me that indeed we have our bottom formed. And then everybody knows that I like to look at my signals after the market closes, not during the trading session. So I'll come in after the market closes, look for a signal on the fast MACD. If I get that signal, I'm not going to take it as a tried and true signal. I'm going to take a few moments and try to build confidence around that signal. And well, how would I do that? I'll look at volume. I'll look at my retracement analysis. I'll look at all kinds of different indicators to either add or lose confidence on that signal. And if I get to a point where I'm confident about that signal, then I'll put together a quick trading plan to trade it the next trading session. Usually something so simple that I can put it into my automatic trading platform. So I like FSS. I don't know much about the company, so do some research. It looks like we've got a dividend coming. That doesn't look like it makes much of a big deal. We just had a nice earnings of 33 cents per share, but we're not going to have earnings for probably about 3 more months. So I wouldn't mind trading this, or in my case, since I don't know anything about it, I'll probably paper trade it, or I call that forward testing it. But I think that this is a nice pattern, if anything. And so we'll look to go long on some FSS, and it's at a nice price range. Let me just look very quickly at the option Okay, here's one reason why I might shy away from FSS. And I'm sorry I didn't look at this earlier, but the option chain doesn't have much action on it. As you can see here, there's very little open interest. That means there's not that many option shares being traded. And if you look at the bid-ask spread, you can tell that there's not a lot of option shares traded because look at how big. That's a $3 spread. Typically, we're looking for like no more than 10 or 15 cents. So it's a great pattern. And I wish that it was tradable with our options, but there's nobody trading the options on FSS. This is more of a just a stock trade on its own.
Yeah, the setup there theoretically is in place, but the liquidity doesn't really allow for, the strategies to be as effective. And that's the nature of options sometimes.
Yeah, if you don't have people trading, if you don't have people playing the game, you can't be a winner.
Yeah, and if it brings me back to the flea market analogy you made a couple of weeks ago. So
Absolutely.
I'll find that video, added in the chat because that's a good one to review. All right, moving on to our next question. You know what? I didn't catch the name, but he's from Portland, and
Mildred.
Mildred from Portland wants to know about Builder's Source. Builder's First Source. BLDR.
This is a lumber. Well, they've merged with a lot of. I know Builders First Source. They've merged with a lot of local lumber companies. They actually have a really neat product. This is just a side note because I've actually been looking at this. You can send them the architectural drawings of like a home or a tiny home or something, and they'll actually cut out all the wood so that it's pre-cut, and then they'll inkjet where each piece goes. So when you get it, it's simply a puzzle, and anybody with a nail gun can put together their home right off of the architectural drawings. You don't have to saw or anything like that. All the pieces come pre-cut, and it tells you exactly where they go, like inkjetted on each piece of wood. It's kind of cool.
That's I just pulled up a little chart there. Like it looks like it's one of their pieces. That's very cool. I was not aware that this was a thing.
Yeah. There's so many going back to our first part about inflation. People, the number one place where people feel inflation is when they go to the store or go to the gas pump. But there's also inflation in the job world, right? We're at almost max employment here. That means that not only does everybody who wants a job has a job, but in addition to that, people who are hiring right now, what some of the different reports I've heard is that there are 2 jobs for every 1 employee. Like you can actually jump jobs and you're almost guaranteed to have another job. So that's something that the Fed is worried about as well, is that not only are prices at the retail area high, but also the inflation in the employment or in the job force is high. And that comes really into as well people who do things like build houses or do plumbers and all those trades, right? There's a big gap in there. In fact, they're dying for the last incomes I heard for somebody who picks up a hammer to build a house. I mean, it's good money. And so all of this technology companies are coming out here to figure out ways to more accurately and with fewer employees build houses and do stuff like that. It's a big market, Sip.
Yeah, so let's see what we have in terms of positions we could put on. Taking a look at the Builder's First Source chart.
Yeah. Okay. I'm looking at this thing and it is moving sideways. I mean, if let's increase our view here. I'm going to look at 2 years. So Builder's First Source has been going up over the last couple of years, and it does look like it had like a moment of like burn and then pop, right? And it looks like it's kind of stalled sideways. It hasn't given us that super duper consistency that we'd like to see in order to trade, reliable premium on it. But that doesn't mean we can't trade premium on it. What it means is we have to be a little bit more nimble. In other words, we're going to tighten up our trade zones around this every time we sell it, so that the worst thing that happens is we get knocked out of the position at a profit. And that's kind of a good thing. So I'm looking at my fast MACD. I see that I got a signal to go long about April 28th, but it looked like that signal fizzled out. I've got another signal to go long forming today. And so maybe a good, this is one of those ones, Sip, where I would do a hybrid trade. I would almost trade this directionally. In other words, I'd pick an option to trade directionally on this so that I'd make money as it appreciates. So I would definitely, number one, because it's a little bit more expensive, Mildred, I would look to find some kind of call option. And before we get too much farther, let's visit the options and see if there's options to be traded. Yes, there is. So as you can see here, we have some options that can be traded on this thing. We'll see if my cursor comes back to life. There it is. We have options on both the put and the call side at different expiration dates that can be traded. So I'm glad we checked that out in advance. I would find a substitute option, a call option to buy that I would just plan on letting it appreciate off of the bottom here. And here's where the hybrid part comes in. If it goes up, say, for instance, to the moon, if it goes up above $85 and keeps going, well, then that's just a directional trade. I'm just going to cash it out once it tops out. I'm going to follow all my rules around directional trading, which is like, as it accrues, I'm going to put on a trailing stop and look to be in this for the short term. But if it decides to stall out a little earlier, like around these levels of tested support, resistance, $78, or even up here at $84, if it decides to kind of turn tail on us there, I would sell some premium and buy some protection. I'd turn that directional trade into a premium trade. So I'd go in it thinking it's a directional trade, but if it stalls out early without going above $85, I'd then sell some premium on it. So I'm going to treat it kind of like both. I'll make money on the movement of the underlying symbol, but I'll also make money if it wants to give it to me on selling premium.
And is that because the consolidation isn't as refined? That's
exactly it. It's because I don't have a clear, 2 tests of support, 2 tests of resistance. It's a little bit all over the map, but we know it's stalled, but it hasn't stalled and then gotten into like a mature sideways channel. It's just kind of stalled. So let's see if it, comes up off of this bottom and it creates a trade for us. In fact, can I offer them a kind of a free tool?
Sure. Let's go.
All right. So if you guys would go over here to the Trading Trainer website. So it's Trading Trainer, TradingTrainer.com. And you click on login. It's going to bring you, it's going to bring me into the web portal. It's going to bring you to a place where you can sign up for a free account. Let me log out and I'll show you how to do that. And do that. And the reason is because I've just included, so right here where it says sign up. Sign up. So do that. Sign up for a free account into the web portal if you don't already have an account. Then come over here once you're in the web portal, and I may have to sign in again. It may knock me out. But if I come over here to the home area, let's get rid of my hamburger menu, home area. There we go. Yeah. Let me just sign in really quick. Oh, I have my little speed signer inner. That's an official term. You come down here to the downloads, and I have this thing called a risk reward comparison tool. and it's part of the free access into the web portal. And it comes with this tutorial on how to use the tool, and it allows you to download the tool. It's just a spreadsheet worksheet tool. But what it does is it allows you to compare different options. So just follow the tutorial, and it's made especially for directional traders, SIP. And so if you're going to trade Builder's First Source and you don't know which option to try, you throw a couple of the different options into this tool, and it'll help you determine which would be the best option to trade this movement up.
Awesome. So I went ahead and added the link into the chat so everyone can go in there, create that free account, watch the tutorial, and start using that nifty, awesome tool.
Yeah, because that's what I would do. That's what I would do for Mildred. I would say, go pick a good option to use to trade this up, and then if it stalls early somewhere, sell some premium, but sell it nimbly. In other words, tighten up your trade zone when you sell premium.
Awesome. Appreciate Mildred. And as always, anyone else watching, listening, that has a specific stock you'd want AJ's analysis on, go ahead and drop it in the chat. We'll see if we can get to it. Moving on to a name we've talked about in the past, probably one of the most boring companies I know of, and that's Hewlett Packard Enterprises. I think there's two, though, right? There's two HPs these days.
Yeah, HPQ is the one company. This is your printers and the computers you'll see at Costco when you walk in the door. And then there's HPE, which is more like their consulting company. They're trying to go after, you guys might know that for the longest time, IBM they repositioned themselves by selling off their computer company part to Lenovo. And that's similar to what HP did by splitting off their company into HPQ. And then IBM really made a name for themselves in more of the business-to-business side on the servers side. That's what HPE is, Hewlett Packard Enterprises. So they're trying to follow IBM's lead. You know, Hewlett Packard, I'm not sure. They don't seem to go away, but they also don't seem to make amazing strides like they did back in the late 80s or 90s, like when they came out with the LaserJet and the inkjet printer. At one point, about a decade ago, I heard that they were making a huge investment and they were going to put 3D printers, the way that they put paper printers, onto everybody's desk, right? They were going to be, because they're the ones who supposedly, have the history of making printing at home possible. Anybody could buy a Hewlett Packard printer and print on paper at home. Before that, you had to go, to a university or to your corporate environment to print something out. And so they were investing into the idea of, well, we're going to make it so that anybody can have a 3D printer at home. But it doesn't look like that investment panned out, Sib.
Yeah, and it makes logical sense, and maybe 3D printing just hasn't taken off like they assumed it might.
Dude, I gotta just say, with 3D printing, so remember Napster, and then Spotify and Pandora and all this. This pretty much ended, besides in kind of boutique-y ways, it ended things like Tower Records and all those different record stores. The whole music industry was upturned because they used the internet to send, music, which is basically just information, to each other, right? The whole industry was upended and it had to recreate itself. Now it's all about live performances again, like it was back in the original part of like rock and roll and stuff. But they said that about 3D printers, didn't they? They said that instead of this whole supply chain, and I almost think about it, I was pondering this the other day, because one of the biggest things around inflation is that there's an imbalance between supply and demand. And a lot of that has to do with the supply chain and a lot of the manufacturing that we especially do offshore in places like China, and Taiwan, Hong Kong, Vietnam, all those places where it's cheaper to manufacture things. But the idea behind a lot of the 3D printing technology was that instead of having to buy this part or buy this device, buy this part, for your washing machine or anything, you just get a file and you print it out, and it just never has taken over yet. I think that there's a huge area of it would be it would make the music industry disruption look like small beans if people started just printing out their parts and printing out their devices at home with a file instead of having to buy it in the whole supply chain. In fact, I bet you the folks who are all into the environment would like that too, because you wouldn't have to ship things halfway around the world.
Maybe in our lifetime, something like that will finally catch up to us. But looking at the chart,
okay,
right,
yeah, thanks.
It is starting to consolidate itself, starting to make itself boring, which is right up your alley.
Yeah, well, and we like boring, but we like boring in a range. So the reason why we featured Hewlett Packard before is because it was boring in this range, and we were talking about looking for a buy signal, and Hewlett Packard's kind of just stalled itself down here at this buy signal. I'm still quite excited about Hewlett Packard Enterprises, and I've actually, because I've been trading Hewlett Packard Enterprises for like the last 20 years, I'm still in it, and I've already purchased my long position, and I'm just waiting for that opportunity. And when I say long position, it means that I've purchased, in this case, I've purchased some stock. But if you wanted to, you could substitute that stock for a back month call. So back month calls can be used in lieu of stock, back month call option. I've got it, and I'm just waiting now for that opportunity to sell premium. You always want to create a differential. It's called legging into a position. That means you do one transaction here and you do another transaction a few dollars higher, or you have that differential, and that's where you're going to create kind of that great profit zone and also reduce your risk. And I just haven't seen, based on what I was trading plan, I haven't seen it move there. It's been kind of stalled here, but I haven't lost faith. And so this was what, Eric?
Yeah.
Eric, don't lose faith yet. I wouldn't be ditching my stock or my back month call options yet. Just wait patiently, and once we get up above about $16.75, that's a good place to sell premium. Even better is to wait for Hewlett Packard Enterprises to get above that level and then top out. And that's where you can sell your premium, buy your protective puts, and start collecting income. In this case, we're just patient. We're just patient.
Yeah, so we'll keep an eye on HPE, looking at your snazzy drawings there. If we do hit that support or that resistance level up there, I agree with you. That's an amazing place to get in, and one of those option premium selling strategies. So
I said it last week, Sip, which was, let's prepare ourselves for this summer doldrums period. The summer doldrums period for us premium sellers is going to be a real profit time. So give it about 2 or 3 more weeks, and a lot of these positions are going to just kick into place. I haven't been wrong yet about that.
Yeah, and we don't have our next interest rate for a couple weeks now, right? Or it would.
Yeah, it's usually every 6 weeks, and so it's probably about 4 or 5 weeks from now.
Yeah, so in the June, which would really match up with a lot of the timing that you've been talking about, waiting to go into that summer months. So thank you, Eric, for the question, and thanks to all the other guests or all the other customers, trading trainer, watchers, viewers, subscribers for submitting those questions. We do appreciate it. If throughout the week you have something that you're looking at, feel free to drop us a message. We'll try to get it on to the show. Heading into the weekend, heading into next week, AJ, anything we should be keeping an eye on?
I'm very interested in the broad market right now. Like you said, it was just amazing how much the price of Bitcoin dropped in just a couple of days. So I'm watching crypto. I'm watching a lot of these more riskier assets get deflated quite quickly. But I'm also watching the broad market. So I think a lot of people should keep their eyes right now because the market hasn't told us its identity, its personality right now. Is it on a downtrend, or are we going to kind of reverse and at this point, or are we going to get teased yet again? So that's kind of where I'm at, and I'm just preparing, right? As a good investor, a good trader, I'm planning out my I'll be spending the weekend doing a lot of planning, especially I'm moving my targets from the May option to now thinking about selling June premium. So I'm going to be looking at opportunities for selling the June premium.
Amazing. Appreciate the insight.
How about you, man? What are you doing?
I'm actually heading back to Chicago for the weekend. My nephew's baptism, so that should be a fun time.
Yeah, that's cool. Little people are awesome.
Yeah, I see the little one on your end growing. She's looking like she's going to be quite the spark in life.
Yeah, that's a way of calling it.
We'll go ahead and drop some, maybe some recent photos on the page so people can follow along.
That would be cool.
But appreciate the time, AJ. Appreciate everybody tuning in. If you enjoyed the content, feel free to hit that subscribe, smash that follow button, and feel free to drop those questions with us. And with that, we'll catch everybody next week. Appreciate the time, guys.
See you, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.